Considering Tesla's present stock market performance, what do you believe will happen to the company in the near future? Experts discussing the top EV company and its stock have shared their separate perspectives. Some are still optimistic. Continue observing while others turn into bears. You won't want to miss this one, I promise. In the next 5 to 10 years, gas-powered cars are expected to become outdated, and the traditional auto industry will need to find a means to transition to electric vehicles. 5 years after it was first mentioned, Tesla finally presented its much-anticipated semi-automatic 18-wheel long-haul electric freight truck, according to Cathie Wood in an interview with Yahoo Finance in early December. Additionally, Musk has hinted that plans are afoot to establish a long-haul truck charging network. Musk did not disclose the cost of the 18-wheeler. The Semi can accelerate from 0 to 60 miles per hour in 20 seconds, and it can go an estimated 500 miles on a single charge. In the upcoming year, Tesla plans to increase production with a goal of delivering 50,000 units by 2024. At PepsiCo in California, the first Tesla semi-trucks will be delivered. In 2017, Pepsi placed an order for 100 EVs when the Semi was initially revealed. We anticipate strong demand for the Semi as Tesla proceeds with increasing truck manufacturing to 50,000 units by 2024, as we observe significant interest from big businesses looking to lower their carbon footprints. In a recent note to clients, FRA analyst Garrett Nelson stated that while shipping out the first new Semis would be a victory in a year when Tesla's stock is considerably lower, the business is still the market leader for electric vehicles worldwide, even with its stock setbacks in 2022. According to Wood, owning an electric vehicle is less expensive overall than a gas-powered vehicle. With subsidies, we believe that the sticker price of both electric and gas vehicles will eventually fall below the price of a gas-powered vehicle and continue to decline, perhaps even sooner than 1 to 2 years. According to our most recent estimates, the average cost of an electric vehicle will be approximately $15,000 by 2026. This would explain their belief that there will be a significant amount of commoditization, because they anticipate the widespread use of driverless vehicles by that time. By then, fleets and design will be less significant, because the primary goal is to develop these cars' ability to transport people from point A to point B, she continued, adding that autonomous vehicles will be operated in autonomous taxi networks. Why does Cathie Wood think Tesla shares can make someone a millionaire? She stressed that even though Tesla was dealing with numerous scandals at the time, the company's revenue growth over the previous 5 years had compounded at a rate of about 48% annually. She went on to say that, with regard to herself and ARK Invest, their projection for the next 10 years is between 50 and 60% for its park, in light of the fact that other manufacturers and companies have been battling supply chain bottlenecks and chip shortages. It is clear that Tesla is working hard to keep its position as the leader in EV production throughout the pandemic. Just to keep the plants and factories operating, Tesla rewrote its software and switched vendors. As a matter of fact, Berlin and Austin now have 2 new Tesla manufacturing sites operating. Together with the Shanghai and Fremont factories, these new initiatives are meant to boost production. These advancements may result in higher operating margins and larger manufacturing scale. When asked what she thought of Tesla in 5 years, Wood said that compared to other auto manufacturers, Tesla definitely has an edge. She said that if one analyzes cars by range and power combination instead of brand and model, Tesla is the best pick among them all. However, she also noted that most well-known car brands like Volkswagen and BMW have done wonders in the last few years, but Tesla is still way ahead of them in terms of the range and power combination. Vehicles the opening of Berlin and Austin allowed them to achieve higher gross margins more than that. Innovative projects like the much-awaited Tesla Cybertruck and the humanoid robot Optimus, among others, prove why Tesla deserves to be at the top of the game. Wood asserted that unless they wish to incur losses on their vehicles, the majority of other automakers will not be able to match or surpass Tesla's combination. Wood stressed how crucial that is from both the performance and a range perspective. When asked what she thought about big businesses trying to compete with Tesla in the development of electric vehicles, Wood said, "They are failing miserably." Wood stated that the reason why Tesla is so far ahead of its competitors is that those businesses have only recently begun to operate. She claimed that what these other automakers have delivered to date are cars that don't even meet the range or other metrics of Tesla's Model S branding is something different. Wood further explained that Tesla uses a lithium-ion pouch, which is much more costly than Tesla's consumer electronics batteries. Therefore, if companies decide to compete with Tesla, they will have to sell every electric vehicle at a loss, and at the same time they're losing their internal combustion engine business. She claimed that even if brands were to convince them, their electric vehicles wouldn't be as nice as those that Tesla would offer. With the domestic automobile industry now ranking in the top 27% over 250 ZAX industries, Tesla stock continues to keep its position as the third-ranked ZAX stock. Tesla is currently trading at a considerably better valuation than it has in the past, even though there might be better purchasing opportunities in the near future. Furthermore, the market for electric cars is currently quite tiny in the auto industry, despite the industry's enormous growth potential. Based on last quarter's revisions to earnings estimates, Tesla stock still looks like it's going to continue rising. Those that are patient and stick onto their stock at the average ZAX price may benefit. For the time being, Target predicts a 66% increase from the current levels. Nonetheless, the main worry regarding the health of Tesla stock is related to its production in China and the demand for its cars in that country. In November, Tesla sold a record number of cars built in China. In November, the company sold 100,000 electric vehicles manufactured in China, according to data that it made public. That represents a 40% improvement over the 71,704 Tesla cars sold in October, and a 90% increase over the same period last year. Nevertheless, a number of publications have stated that Tesla intends to stop producing in China on December 9. According to Reuters, Tesla plans to halt manufacturing of the Model Y at its Shanghai facility during the last week of December. In response, Tesla denied the reports, stating that it was not reducing its Shanghai facility by up to 20%. Even with a price reduction in late October and other incentives, the demand forecast in China has grown less certain. Additionally, a significant portion of Tesla's Shanghai factory-produced automobiles are exported from China. However, observers are becoming concerned about how much time Musk is devoting to Twitter. Apart from terminating over 50% of its workforce, Musk is undermining the social media platform's content moderation system, which has led to an increasing number of customers losing faith in the Tesla brand and depressing Tesla stock. In a note to clients, analyst Adam Jonas of Morgan Stanley offered his perspective on the subject. According to him, Musk's resentful remarks have increased the public's bad opinion of Tesla and may seriously harm the foundations of companies that produce electric vehicles. The results of our investor survey support our belief that Elon Musk's recent use of Twitter has fueled negative sentiment momentum in Tesla shares and may cause a negative skew to the company's fundamentals. When asked why ARK took a favorable view on Tesla stock, Jonas responded in a message to clients that he still kept his buy rating on the stock. ARK allocates CFA. In a recent CNBC Squawk Box episode, Tasha Keeney stated that the percentage of electric vehicles in total auto sales is just in the single digits. She pointed out that this is still an emerging business, but she nevertheless saw Tesla as one of the leaders in both autonomy and electric vehicles. For more videos like these, don't forget to subscribe to this channel.